Well, since we're talking about autos, let's get a specialist on board. Abhishek Gaoshinde, who's been tracking the auto sector for a while. He's a Deputy Vice President Research at Sharekhan, joins us now. Plenty of stocks in focus. Abhishek, thanks a lot for joining in. First, I want to talk about Bajaj Auto, right? The management was quite confident, although he did mention that overtaxation, overregulation is something that continues to hit the two-wheeler space. But the Bajaj Auto stock has had a terrific run. This is its best performance in a single year since 2010. Do you see more upsides in the stock?
Definitely, we have been more positive on the stocks like Bajaj Auto and Hero Moto, Hero MotoCorp since a while, and we have taken a contra call on these stocks 6-7 months back. Practically, what is happening that although Bajaj has been on the focusing on the premium side, but post this introduction of a Triumph, the life scale of its life cycle of its or the product cycle of the Bajaj Auto has been completely changed. One second, that historically, if you see that Bajaj Auto has been focused on the EBITDA margin more than that of the volume side. So when the and 125cc segment has been continuously performing well in the domestic market. Third thing is that although the export market are still in the under pressure, but what has happened in this particular year is that the export volume fall has been somehow halted, and the bottom has been somehow reached. So gradual recovery is on the card. One second, the margin expansion theme is continued. Third, that it has been focused on the EV segment, where Street has been raising question that whether it would be able to capture that market or not. But now its Chetak has been doing well, and now it has been present in the electric three-wheelers also. So most of the triggers, if you see that are consolidating in this particular years, and that has been reflecting in the stock price, and we have continued to be positive on this mass market players which are turning to be premium player like Bajaj Auto and Hero Moto.
Okay, Bajaj Auto and sure. Okay, so Bajaj Auto and Hero MotoCorp is what you like in the two-wheeler space. What about TVS? I mean, the market cap of TVS is now approaching what, 1 lakh crores. Who would have thought, right? It's really had a phenomenal run, and now it's going big in the export markets, whether it's Vietnam, whether it's France, across Europe. Do you see TVS outperform its peers in the near to medium term? And since exports is a larger contribution now, about over 25% of the business, do you think that the valuations of TVS, could sort of catch up to some of the other players?
See, what is happening right with the TVS Motor is that it has been following a multi-product, multi-model and multi-brand kind of a thing, and all that thing are going in the right direction. And beyond that, Street has been focusing TVS Motor more for its EV portfolio, and on that front, it has been doing well. If you see that the TVS Motor was one stock which has been reporting a single-digit kind of EBITDA margin in the whole two-wheeler pair. But if you see for last 8-9 quarter, it has been consistently delivering double-digit kind of a margin. In this quarter, the margin went up to 11%. So what Street has been building up for the TVS Motor is that still there is a room for catching up of in the EBITDA margin if we consider the benchmark for TVS Motor is the Hero MotoCorp. And then the valuations would not be a concern. The concern would be on the maintaining or sustaining the EBITDA margin on the high side. So far, the company has been delivering EBITDA margin, and that's why Street has been giving it a value. But going forward, more than the valuation, the concern would be on the delivery side, given that the rise in the volumes of the EV would have some drag on its EBITDA margin. So,
Okay.
in our preference spec, it comes after Hero MotoCorp and Bajaj.
Okay. So first Hero, then Bajaj, and then TVS, right? Of course, TVS has run up a lot also, up about 40% in the last 6 months. Finally, I wanted your thoughts on Tata Motors, because that stock has had it very good. Almost everything is working in its favor, right? JLR has picked up, the debt has gone down. Now they're offloading their stake in Tata Technologies as well, and we've seen the very strong response to the IPO there. You think there's further upside despite the 80% rally this year?
See, what has happened that in overall or automobile pack, Tata Motor is our top pick. And the reason is that you have rightly mentioned that all of its cylinders are firing simultaneously. But beyond that, what is happening that it's the products in the PV segments are in domestic markets are being accepted well, and in CV segment, the shift in the focus from the volume to EBITDA margin, that is playing well. And what you said is right, that in the JLR case, we have seen worst period in last year because of the cheap supply and all these things. And before that also it has been facing multiple problems. But now it has been in the on the right track in the JLR business. And if your value unlocking processes continue and net automotive debt is coming down, then I think most of the positives are there, and I think that would remain continue. So we are continuously positive on the Tata Motors, and we believe that the H2 of FY24 would be better than that of the H1 FY24. And post that, we will start seeing the EV cycle to come out in a JLR side also. So there are still room to play in Tata Motors.
Abhishek, thank you very much for your views. Appreciate you joining us with that perspective on the auto space.